Good morning to all traders and welcome to another daily markets watch. I hope you had a nice weekend and enjoyed the time off. We are back again with another daily video on gold, euro dollar, and also Bitcoin. Markets are under pressure, as you well know, since the new Omicron COVID variant was detected in South Africa. There is a lot of bans in travel. There is a lot of concerns around demand of oil and the supply by OPEC. There is a lot of currencies, high beta currencies that are under pressure, and we have had a huge decline and a huge shift from risk assets to safe havens. Today, it's expected to be a day where maybe we're going to see a pullback as some sort of short-term relief rally, as we call. But also do note that it's expected in general to be a very volatile week because we are very near the end of the month of November. Okay, so we have expiration of contracts in CFDs, and this is going to affect the markets going forward. We have some interesting news as well. We have the Fed's speech. We have a lot of PMI data from around the globe, mainly in Europe. We have GDP figures. It's going to be a very interesting and busy week. And don't forget, by the end, on Friday, we also have the NFP, a very important one, if you ask me. So I'm going to go and get started with the prices of gold first, guys, and tell you that although we did see a shift initially in safe havens, gold has really stopped around 1815 and deteriorated since all the way back to where it started from, which is a bit worrisome. And to be fair, it also looks a little bit bearish. Now, given the signal that we see here on the RSI and the MACD as well, right? We did see a correction to the downside. And if you remember, I've been a bit vocal about how markets look when we are looking progressive and when we are not. And in this case, unfortunately, that looks progressive to the downside. Okay, so maybe we're going to see some sort of correction back to around 1815 or so, but this is very likely to go back lower again below the 1800s, which we currently are, by the way, but no, closer to 1780, 1770 or so, and find support at this channel. And if you remember, this is the channel that we talked for a while. Okay, this is from back down at around 66.79 and all the way up. Okay, we are still in the medium term seeing a bias to the upside. However, back below this trend line from the all-time high, we remain a little bit more bearish in the medium to long term. Okay, so this area over here that you see is going to determine what's going to happen with the prices of gold. But unfortunately, right now we look more bearish when we look bullish based on this structure. However, I want to also tell you that we do have a very nice bullish divergence appearing on both RSI and MACD. So perhaps that move to the downside might prove to be the last one to the downside, and then we may break up higher and continue all the way up. Either way, for today, I don't see prices actually moving away from this level. I think we're going to fluctuate around the 1810 and 1790, 1785 or so, and then get some sort of clues about where the medium term is going to take us. That is also going to depend, okay, because we need to look at price action when the New York opens. Okay, Cyber Monday today, don't forget. Now, on euro dollar, we talked of a potential bounce last week in one of the videos. And we did say that we remain bearish, okay, because, well, this has broken below the 62 Fibonacci retracement, okay. And the reality is that we don't really get any signals on the RSI or on the MACD that there is signs of a potential reversal. What this means is that the bias remains to the downside. However, in the short term, a pullback can be seen, and that pullback can take us even up to 114.38. This is a level, well, if we assume this low and this high, of course, right? Because that might change soon. 114.38 is the level where I will be assuming, or I can say to, at least based on my strategy, that we still remain bearish, even if we go up there. Okay, only when we break above that level, I might start considering for a potential move to the upside. Okay, but without any signals on the MACD and the RSI, you see the RSI may be a tiny bit of a something, but we see that only in the short term. Okay, which means 1, 2, 3, 4, perhaps 5, and then we might get a correction and might continue all the way up to around that level. Well, more clarity is going to be given. Okay, and of course we're gonna know whether a break or here and choose or not. We're gonna know where this could potentially take us. But for now, I will be really looking at the 112.31. We really want to remain above that level. Okay, otherwise the likelihood of these two signals on the MACD and on the RSI sending us lower to break past 111.86 are going to increase. But without breaking 112.31, we are still okay, because this signal might just be a simple correction down here for a potential continuation up to around 1377 or so. Now, the best thing we can do, because we don't really need to get down to 112.31 to move higher, right, is to put our Fibonacci level over here, go down on the 1 hour and look at where we are right now. We are at 50 Fibonacci retracement. Now, as you remember, this is a very important Fibonacci retracement for me, because this is what determines whether the bias is to the upside or to the downside. So as long as this level now holds in the short term, that has good chances of moving up higher. Okay, but on a different note, we don't get any signals on the RSI on the MACD, apart from a very small hidden divergence on the MACD histogram. So let's pay attention to the euro dollar at around 112.60, which we currently are. And last, BTC. If you watched the video I did on Saturday, you should know that we are also seeing a progressive move to the downside on BTC, and that we were also expecting some sort of correction here to the upside. And that is also seen on the MACD and on the RSI. The medium term remains still to the downside, right? Because, we have done just crossed the 23 Fibo. We could head to the 38 and then to the 50. The 50 will be the max for this particular case, okay, for this short-term move to the upside. In case we do break 50, then the bias is going to change to the upside. But until then, nothing changes. We still remain biased to the downside rather than to the upside. Now, this also is another level that we need to pay attention to. Okay, that is the top of this channel over here, because this channel is connecting the two tops over here. Okay, which means it gives us some sort of guide of how markets can move. With this recent low down here overnight, we had this pump up, and that looks progressive. So it is possible that we get to this trend line and then do a pullback for a potential continuation up to 59 and 61, or if we don't see that, then very likely to continue lower down and go and even meet around the 56, 67, which is the 62 Fibonacci retracement of this last leg to the upside from 39.50 all the way up to 69K. Okay, so which is, again, as I said, a very important level. Now, we did do the 50 already, and the idea is this, that when we do get pressure testing new levels to the downside, that means that the appetite to see more levels to the downside in this case is increasing. Okay, so with that in mind, okay, the idea is to wait for a potential correction that is going perhaps to give us a short pullback and then a continuation to the upside. Wait for a signal around this area, okay, on the RSI and the MACD, and from there, look for potential entries to the downside. Now, of course, that can change if and when 6100 breaks, because the bias will turn to the upside rather than remain to the downside. Okay, so now a little bit further in the shorter term, we can do a similar thing as we did with BTC, with the euro, and look at this. We are now, okay, correcting very slightly. We might remain in this pattern for a while because it looks like doesn't look like there is any progress here. So we might stay here for a bit and then move higher to around 59.23, or in a different case, we might move a little bit lower, okay? Do a correction to 55.75, 55.15 or so, okay? And then move higher. But whatever the case is, there is one level we need to maintain for the short-term move to the upside to ensure to continue. That's the 52.28. If we break back below this level, then the likelihood of going for a fresh low is going to increase. On a different note, don't forget that the short-term signals also play part. We do see a signal on the MACD, and we do see somewhat of a signal on the RSI over here. This is a bearish hidden divergence, okay? So this is usually a signal for a pullback. So pay attention to what level we're going to reach down here, whether we're going to break below 55.75 because 75 because this will change the bias or not, and whether we actually even get there, because the higher we finish the pullback, the more chances of moving deeper in that corrective move. So guys, this will be all for the day. I want to thank you very much for watching. As always, if you have questions, go ahead and ask on the YouTube comment section. And trade safe and take care. We'll be here again tomorrow with another daily markets watch.